Now speaking, Shane Laidlaw, Investor Relations. Thank you for joining us today to review Cronos 2023 second quarter financial and business performance. Today, I'm joined by our Chairman, President, and CEO, Mike Gorenstein, and our CFO, James Holm. Cronos issued a news release announcing our financial results this morning, which is filed on our EDGAR and SEDAR profiles. This information, as well as the prepared remarks, will also be posted on our website under Investor Relations. We may make forward-looking statements and refer to non-GAAP financial measures during this call. These statements are based on management's current expectations and assumptions that are subject to risks and uncertainties. Factors that could cause actual results to differ materially from expectations are detailed in our earnings materials and SEC filings available on our website. Now, let's move on to our prepared remarks. I'll pass it over to Cronos Chairman, President, and CEO, Mike Gorenstein. Now speaking, Mike Gorenstein, Executive Chairman. Good morning, everyone. Our focus in 2023 is on launching innovative borderless products, improving gross margin, and driving efficiencies in operating expenses to generate consistent cash flow. We exited our US CBD operations in Q2 to reduce costs and focus on adult use and medical cannabis markets. Today, we announced plans to exit our Winnipeg facility, which will drive additional savings and improvements in COGS in 2024. We anticipate saving $20 to $25 million in operating expenses in 2023 and capturing incremental savings of $10 to $15 million in 2024. Our spinach edibles remain the #1 brand in Canada, and Peace Naturals is a top brand in Israel. We are relaunching the Lord Jones brand in Canada's adult use market in Q4. We increased our operating expense savings target to $20 to $25 million this year, and our gross margins expanded by 130 basis points to 16.3% in Q2. We also announced the planned exit of our Winnipeg facility, which will drive COGS savings in 2024. We exited our US CBD business to focus on adult use products and preserve cash for future US entry. We are excited to bring Lord Jones back to its adult use roots in Canada. In Q2, Spinach remained the #3 cannabis brand in Canada and held a 4.1% market share in vapes. We launched new flavors and products, including Sours by Spinach and 3 new vapes. We improved our position in pre-rolls and flower, with 3 SKUs in the top 10. In Israel, the new regulations will simplify the process for patients and doctors, increasing access and patient count. We launched new pre-roll products and partnered with Fighters for Life for a fundraising campaign. In Germany, we signed a distribution agreement and anticipate shipments in Q3. Our successes and pivots have resulted in cost savings and positioned us well to execute in any market. Now speaking, James Holm, Chief Financial Officer. Good morning, everyone. Let's dive into our second quarter 2023 results. We reported consolidated net revenue of $19 million, a 12% decrease from the prior year. This decline was primarily due to lower cannabis flower sales in Israel and Canada. Consolidated gross profit was $3.1 million, representing a 16.3% gross margin. While there was a decline in gross margin, we are seeing signs of improvement and stability compared to previous quarters. Our consolidated adjusted EBITDA improved by $0.7 million from the prior year, driven by a decline in expenses. We have increased our cost savings target for 2023 to $20 million to $25 million. Our balance sheet remains strong with $841 million in cash and short-term investments. Free cash flow improved by 36% year-over-year. Looking ahead, we anticipate a net change in cash of less than $5 million to $10 million for the remainder of fiscal year 2023, an improvement from previous guidance. While we have decided to discontinue providing revenue guidance due to market conditions, we are confident in the trajectory of our business and our preparedness for new market opportunities. Now speaking, Mike Gorenstein, Executive Chairman. We are pleased to report that our Spinach brand is performing exceptionally well in Canada and Israel, holding a top 10 market share position in all categories, including flower, pre-rolled, base, and edibles. We are confident in our ability to capture additional market share as regulations evolve. In terms of our financials, we closed Q2 with $841 million in cash and equivalents and 0 debt. We generated $12.5 million in interest income in Q2 and anticipate generating an additional $20 million to $25 million in interest income through the remainder of 2023. Our Spinach brand has achieved impressive market share in June 2023, ranking as the #3 cannabis brand overall, #1 in edibles, #2 in flower, #8 in pre-rolled, and quickly gaining ground in the vape category. We also have strategic investments in key players in the industry, including a 6.3% stake in PharmaCann and an approximate 10% stake in Batura. Additionally, we have a profitable partnership with Cronos Group and a valuable exclusive partnership with Altria on a global basis. While this quarter's top line fell short of our expectations, we ended the quarter with more cash than the previous quarter, making us the leader in net cash among our competitors. Thank you, and now I will open the line for questions. Cohen and Company analyst Vivian Azer inquired, could you provide more details on the launch of Lord Jones in Canada, considering the volatility in the Canadian marketplace and the challenges in the premium segment? How do you plan to position the brand in Canada, given its legacy positioning in the U.S.? Mike Gorenstein replied, when it comes to Lord Jones, we see a strong opportunity in the premium edibles market. We have successfully differentiated ourselves in this category and believe there is still room for growth. While flower may be more challenging, we are exploring the potential for a new, incremental edible product that aligns well with the Lord Jones brand. Leveraging our distribution strength and trade partnerships, we are confident in our ability to launch this product effectively. While the market size may not be as large as spinach, we anticipate strong margins and gross profit. We are excited about this opportunity and remain focused on aligning our product offerings with the future direction of the brand. Cohen and Company analyst Vivian Azer inquired, is there a strategic reason for adopting a more targeted approach to distribution in order to protect brand equity, rather than pursuing nationwide distribution? Mike Gorenstein replied, the success of our sales in different provinces will depend on the store setup in each province. We expect to perform well in provinces with a strong demand for premium products. However, we will maintain a consistent focus on major provinces by population. We plan to have a national launch, but we will also implement a phased rollout to ensure we have sufficient demand in the right positioning.